Good morning, Chris Beach, and welcome to Starting the Markets on IG Live. And it's another cautious open for indices after yesterday's rebound. Earnings last night from Alphabet and Microsoft took the market in two different directions. Good performance from Microsoft, and both actually beat estimates, but it was the cloud computing and that divergent performance of their cloud computing divisions that really caused the different movements in those two stock prices after hours. Microsoft cloud computing division seems to be doing well. Google's or Alphabet's less so, and that drove the stock down. So the market found itself torn in two directions, really. Asian markets did better overnight. Signs of perhaps a stimulus program of sorts coming from China, with new bonds being issued, helping to support sentiment to an extent. Although, again, it's a game of two halves, because you've got a rise in Australian inflation in Q3 that then leaves open the door for another rate hike from the RBA. So once again, inflation back in headlines, and not for the reasons most investors would like to see. Otherwise, it's again tech earnings. Meta tonight, going to drive markets after hours. Before that, we get a decision from the Bank of Canada, which isn't the headline really event of the day. It is nonetheless important, particularly given that Australian inflation readings, to see what they have to say, acting as a warm-up for tomorrow's ECB meeting and, of course, next week's Fed decision. But starting with indices and moving on to the FTSE 100, excuse me, currently trading at 73.75. So we're just seeing a little bit of weakness creeping back into the index after the attempt at the rebound yesterday. And that might suggest that we've seen maybe a low forming for the time being. But what we now need to see, certainly for the buyers, is a follow through, if you like. A move back above the 7,400 level is the key thing here, really, because at the moment that's what's held back progress over the past couple of days and appears to be doing the same thing as well. Now, of course, lows don't form in a single day. Indeed, they tend to take several sessions. Indeed, that's the pattern for highs and lows. Markets rarely bottom in a single day. It takes time for it to form, and there's usually quite a bit of volatility around that point, as you can see amply in this chart here, with the highs and lows since February on the FTSE 100. Usually the lows form eventually, but they get some quite wild swings around that point. And even if you look back into August, there was 2 or 3 days of, if you like, close fighting between the buyers and sellers before they finally won out and the market then began to push higher. So I think when you're trading this in all markets and trying to spot turning points, there might be an argument saying you shouldn't try to spot turning points because it can be quite dangerous, but you should expect the volatility and the shakeout. So that's why usually, while the trend is, or a new trend is establishing itself, you have to maybe go for smaller position sizes and wider stops. But so if we get a close back above 7,400 and certainly above 7,420, that might solidify the view that once again the buyers have stepped in around this 7,400 level, which mimics what they did in September and the beginning of October, and then that clears the way perhaps for a move towards trendline resistance from those February highs, and indeed the 200-day moving average at 76.37. Moving over to the Dow, to the Dax rather. Yesterday, again, something of a carryover from where we had on Monday's session, where the index briefly dipped below 14,700 the first time since March, and then finished above it. And then this is the kind of thing you would want to see, I think, for a low to be formed. That we did then have a strong recovery on Monday, and then a follow through on Tuesday, with the price moving back towards 14,900. Slightly cautious this morning, it has to be said, but maybe there's a sign that a low is in for the time being in the DAX. And I think that's perhaps how we should look at this. Nonetheless, there's a lot to be done before we could argue that things really have formed a low, and that a more bullish view in the medium term prevails. A short-term rebound towards trendline resistance and a declining 50-day moving average wouldn't be surprising, but it would leave the downtrend that really has been in place now since late July, leaves that intact. We could see it bounce maybe all the way back to 15,300 or even 400. But overall, it's a longer-term view, long-term bullish view requires us to be back above 14,000, 15,400 and higher, really, to then say, okay, maybe a bigger move higher is underway. But certainly, excuse me, notable that the price for the moment has seen buyers stepping in around where we were in March. That was followed up by huge gains. Now, we're not saying that will be the immediate result, but it is certainly notable that what was previously support has been tested as support once more, and for the time being continues to hold. That short-term bullish view It'll be, of course, negated if you get a close back below 14,700. And then moving to the Dow, given a bit of a boost by those tech earnings last night. But as we were saying with the DAX, really looking at what was important before, at the beginning of October, the index dipped towards 32,900, 32,800, and then it rallied. Admittedly, not for very long, but it did rally. So maybe a second time's the charm here, and you get another bounce. A close back above 32,300 could help to solidify that view, really. Let's just look at the hourly chart of the Dow, because it might just give us a sense of what's happening. And that's clearly, this is very, very short term, but it is interesting that you've got trendline support of a form coming through from Monday's low. So we could see maybe the index drop back towards 33,000 and then start to rally again. I think that's the key thing. If it can eventually stay above the 50-hour moving average and continue to make progress above the 100-hour, that solidifies the view that maybe we'll see a recovery here. It still is just about an uptrend for the Dow. It's looking very, very tough at the moment, and if we don't get something soon, we could be on the cusp of a death cross with the 50-day moving average crossing below the 200-day. So that is something maybe to watch in the short term. Moving to FX markets, the dollar received fresh support yesterday. Really, it seemed like we had the makings of rallies or sustained rallies for the euro and pound against the dollar, but as Tuesday's session showed, that was a false hope. Looking at euro dollar, what is interesting here is we find ourselves really caught in a bit of no man's land, because we've had the close above trendline resistance from the July high. So it was a good first step for the bulls, that they couldn't manage that before, but have done over the past week. But then we hit the 50-day moving average and reverse course, and indeed almost entirely wiped out Monday's gains. So that's a slightly negative development on that front, has to be said. You could argue that after breaking trendline resistance, it wouldn't be surprised to see it test the trend line from above as potential support. So that means maybe we get a move back towards 105.50. If it goes back through 105.20 and back towards the lows of late last week and back below trendline resistance, that clearly is a negative sign and cancels out any hope that we get a short-term bounce. Even if, as I was saying earlier in the week, even if you get a bounce back towards 107.50, 108, it's still a relatively negative view because of this change in trend we've had. And that, with the lower high being created potentially in any kind of area around this zone, 107.50, that wide zone there, that would still be a negative sign, another lower high. Maybe this is a lower high, we get the price drops back below 105.30, the MACD crosses lower, and we go back to the downside again. So that's the key thing to bear in mind, that for the moment, what looked like a short-term rebound seems to have been cancelled out for the time being this morning. Obviously, it's the ECB tomorrow, so that will change things, could change things significantly if you get a slightly more hawkish ECB. So definitely something to watch if you are trading euro dollar. Not much to report on the front for the pound, but certainly, again, if we're looking at the price action determining how we view this, the failure to break trendline resistance yesterday sends a message that really the sellers are back in control. The dollar strength is back in again here, and that then suggests maybe we'll see it go back below 121 and back below the early October low at 120.60. That's the key thing, really, that the price was trying to rally. It did essentially from the beginning of October, but it ran out of steam at 123, and then also around trendline resistance here, 122.60. So that puts us in mind of a move back towards 120.50 and potentially lower again. While moving averages don't tell us what will happen next, they kind of give us a lean to what we think might happen next. And certainly with the 50-day, as I said before, below the 200-day moving average, you tend towards a more bearish view in the short term here. And additional declines take us down towards 119.60 and maybe even down towards those March lows at 118.30, which of course is plausible if we get continued movement to the downside, if the dollar continues to strengthen. And we have to keep an eye on dollar yen, even though it's not moving very much. It's just continue sort of play chicken, if you like, with the Japanese Ministry of Finance, because it's the 150 level that they've said might be the key for intervention. They haven't said it definitively, they've just sort of hinted very broadly at it. But as you can see for this price action, it's fairly obvious that that is the level at which the market is wary of breaching, really. It keeps tiptoeing closer and closer and then dropping back again. No desire for it to fall, however, has to be said, still firmly in an uptrend. Maybe that's the kind of shakeout we need to see, is a move above 150 that initiates intervention from Japan and then causes a pullback in the currency pair that nonetheless leaves the uptrend intact. but there's not much to report. But obviously, it's one of the most popular currency pairs on the platform, and with some potential volatility if you do get intervention. We'll just have to keep a weather eye on this, but definitely still stuck around 150 with no sign of any strength to the upside, and equally no sign that this is going to drop back in any sort of medium term time frame towards 148 or lower. So something just to keep your eye on for the time being, until or if and when something happens here. And to commodity markets, gold prices holding on to almost all of their gains of the past 2 or 3 weeks. Oil prices, however, coming under pressure once again. If we look at gold, we're back at 1970. We're just drifting downwards. Yesterday's session saw make what might have been the beginnings of a pullback. We tested down towards 1956, but then the buyers came in once again, determined to hold on to this. Maybe this is what we get, is just a drift over the next few days. We don't get a big drop, but we do get a drift down, maybe towards 1950. Nonetheless, though, again, it has to be said that huge rally from the October lows really changed the dynamic here. And unless and until we saw it reverse course entirely back below 1900, it has to be said that it looks like gold has finally found a reason to rally, and that we've been caught out. On one side, it was fairly reasonable to think that we would get seeing the beginnings of a rather bearish move here in September and into October. That's now been cancelled out, of course, for safe haven buying. And so for the time being, it looks like the buyers remain in charge. It's just that they understandably perhaps can't really keep pushing this one back above recent highs. Buying momentum and selling momentum, but unlike anything really, they do get exhausted after time. It's clearly that for the moment the buyers have exhausted themselves, and there's no one willing to push this one higher in the short-term time frame. But if we do get a pullback down towards 1940, that might well still make it into a possible buying opportunity for the medium term. It might then set us up for a move back towards 1980 and indeed 2000. But it's oil prices where things are really moving once again. This is quite a seesaw movement, because we've had a big rally in the first half of October. Second half of October, we've given back almost all that ground within 4 sessions. We're back below the 50-day moving average for WTI. We are back at a form of trendline support from the October lows, very short-term trendline support, but that is one thing perhaps that the bulls are clinging to, that we could see maybe a recovery back above 84 and suggest that, okay, trendline support has held. A close below, say, 82.50 would negate that view, and then bring the lows from the beginning of October at $81 a barrel back into view, and then down maybe towards the 200-day moving average, which aligns quite nicely as well, actually, with, if you look here, we can the lows from late August around 77.50, just below the 200-day moving average. We have closed back above 86, and that would be, again, the more bullish view that we're looking for, and maybe suggest that once again oil is moving to the upside, but certainly the sellers just about have the upper hand for the time being. So it's Meta earnings really stay as the main event of the session, even with the Bank of Canada decision as well expected this afternoon. It was a slightly better day, of course, for US indices, better day yesterday with gains for the Dow. But at the moment, US futures pointing to a week open with around 15 points being knocked off the Dow to start the day. So a relatively quiet start to the session as we await that Bank of Canada rate decision and then those Meta earnings tonight. But that's it for me. Thank you for joining us, and we will see you again tomorrow at 10:30.